Okay, okay. Oh, we have not done soft farm. Wow. Oh, yeah, that's true. I think we stopped there. Okay. Oh, and I was okay, okay. So now I think we need to. Oh yeah, it's okay. We need to choose which one should we do now. Can you guys see my screen?
Yes, we can.
All right. Should we do Shade Adu or should we do soft plan? Stop shouting.
We can start with Shade Adu since it's a full this thing.
Let me let me open it. Okay. Let me see. Shade Adu soft farm. Shade Adu. This is Shade Adu, right? Hmm. I would advise we do soft farm. Oh. I would advise we do soft because soft farm is past question. Maybe we'll just do the two. But let's start with soft farm. I had planned that we'll do CGT before. I had planned it, but if we have time, we start CGT, right? Maybe we'll just do the written aspect. But let's do this. Let's start with soft farm. So is this soft farm? Okay, soft farm. Let me open our Excel. So I think some people tried this assignment and they submitted to my DM. Are those people online?
Yes, we are.
So I think I got two ladies that tried the question and they really tried. In fact, it's also funny. One of them got it correctly. Oh. Correct. What fucked that up was she used the wrong rate for capital allowance. She picked the wrong rate and it messed up her work. The other lady did the correct rate, but she missed one. I think she missed one or two disallowable expenses, sha. And then she forgot to add the disallowed capital expenditure to the capital allowance. When I gave you the assignment, I think I remember giving you an hint that if you see any disallowed capital expenditure, you are going to add it to your capital allowance. The lady did not do that, and that was what messed up our own work. But well done. I mean, I really appreciate the fact that you guys tried the assignment, and I'm happy that they both did well. Like, it means you guys are reading. Okay, so let's start with soft farm. So before we start, I hope you guys don't have questions. If you have question, ask now. Soft farm and agro allied limited. Okay. So soft farm and agro allied limited, a subsidiary of Emperor Agro Incorporated, Italy, was incorporated in January 2018. Soft farm, the company produces palm kernel for domestic use and export to European markets. From this paragraph, you can tell that Soft Farm is a subsidiary. The parent company is in Italy. Managing director have received letter from the head office of an impending visit occasioned by poor business performance since commencement of the business. In spite of financial and technical support rendered by parent company, it should be recalled that January 2022, the parent company granted loan request of 100 billion to Soft Farm for business expansion. The board has scheduled a meeting for the next month for the consideration of financial report of Soft Farm and Agro Allied Limited for the year ended at 1st December 2022 and review of past financial reports and tax assessments. As the newly engaged tax consultant to the company, you have been invited to be part of the meeting for the purpose of providing professional opinion on tax-related issues. Remember, guys, I tell you that in ICANN exam, ICANN sees you guys as a tax consultant. So you must put on your tax consulting act. So like in the question, you have been engaged as a tax consultant and they want to give your opinion on tax related issues that may arise. To help you to prepare for the meeting, the financial accountant has been directed by managing director to make available to you financial statements for all the period under review, books of account, returns filed, and tax authority and other supporting documents. You noted from the preliminary review of the financial report for the year ended 31st December 2022, an item that requires further discussion with management of the company. This issue is in respect of the interest paid on loan obtained from parent company. Extract from the financial statement for the year ended 31st December 2022 reveals the following. So we have this, then we have additional information. I think we did A of this question now, Abby. We did A now.
Yes, I've done the EBITDA.
Okay. And I believe there's no question on that. So we can move to the next one. Adjusted profit for computation of adjusted profit for 2023 year of assessment. So let's do Naira. So before we can, okay, I think we can do adjusted profit, then we can do capital allowance afterwards. Since we will not need capital allowance for the adjusted profit. So now let's start the adjusted profit. We have our net profit. Sorry. Hello, Mr. Ma. Yeah, come. Net profit. How much is that? 104,560. Let's put this in Naira. So what do we, hey, hello. Oh my God. Yeah, take this kiss. Sorry for that, please. Then you had disallowed expenses. So let's check from this place. Staff salary, ground rent, motor running expenses, audit and accountancy, repair and maintenance, depreciation. I guess depreciation is disallowed, right? Depreciation. How much is that? 38,240. Let's continue checking rent, power, legal costs, rate, allowance for that student. This one will have additional information. Donation, interest, and other finance costs. Those something we have. Income tax provision. Is income tax provision allowed?
Yes, specific is
Eh?
allowed. Specific is allowed.
Income tax
General.
provision. Income tax provision is it allowable expenses? Income tax provision is like you're allowing tax if you allow it. Okay. Now let's go to the additional information. 20% of export sales were made to parent company at the prevailing international market price. What is this information trying to tell us? Guys, oh yeah, oh. What are they trying to tell us with this information? Do you think it is relevant?
Yes, Mike is relevant.
So what is it trying to pass across to us?
That the um, connected party relationship is, I don't know how to put it, but it is relevant. Like they do their business based on the prevailing international market.
You have an idea, but you have not really said what I want to hear. Any other person?
shifting.
I didn't get that too.
Profit shifting, ma.
Is like I said, you have an idea, but you've not gotten what I want to hear. So under transfer pricing, I'm very sure that you would have been taught something called arm length principle, right?
Yes, yes.
So can somebody explain what arm length principle is? What is the principle all about?
Basically, it means that the transaction between related parties should be done as if it happened between unrelated parties.
God bless you. That is just arm length principle. And that's what that particular aspect is trying to show us. So what they're trying to tell us here is that though 20% of export sales were made to the parent company, the price at which they made it is at arm's length. They did not treat the parent company as if they are connected person. They treated them as if they are what? Unconnected persons. Assuming this question is saying that they did not sell to the parent company at the prevailing market price. You calculate the prevailing market price and you will add the difference between that market price and the amount at which they sold to the company. You add it back as profits. I don't know if you get what I'm saying. Let me give it figure. Let's assume that the prevailing market price is 500 and they sold to the parent company at 400. That 100 naira difference would be added back as sales. Sales not recorded because it was stupid of them to sell something worth 500 for 400 to your parent company in the first place. Do you get? But this question is trying to tell us that the stuff is worth 500 and they sold 500. It means that all is well, right? So now let's go. Other operating income. We have dividend, net, profit from disposal of non-current assets. Which of these two, or is any of these two disallowed or non-taxable?
Two of them are non-taxable.
Both are non-taxable.
The two are non-taxable. Yeah. So when we finish adding disallowed, remember to less non-taxable. So repairs and maintenance, repairs of plantation equipment, repairs to premises, expansion to warehouse. Which of these is disallowed and why?
Expansion to warehouse is disallowed.
Why is it disallowed?
Expansion to warehouse.
Why?
That is a capital
Capital nation.
Yes, capital expenses. You guys, you are hot today. Oh, that power will go plain, and that's good. I like it. I like today's energy. Okay, so that's it. Rent paid. This is in respect of accommodation for newly employed general manager whose basic salary is 4,800. So let's go. Rent paid. How much was the rent paid? 1,850. Abi, is this it? I think this is it now. 1,850. Then the salary of the person is how much? 4,800. Is he allowed or disallowed, and why?
It is allowed because the amount
It is allowed because we don't have any business with accommodating the newly employed general manager. And again, his basic salary can even afford him accommodation. So why should we? I don't know. That's my own idea.
Okay. Any other opinion?
yes, now it is an allowable expenses because
Why?
the manager's salary is above the rent paid. So it's an allowable expense.
So any other person, any other opinion, or if you let me know. Sorry. Hey, let me know if you agree with one person or the other. So actually, this expenses is an allowable expense. It is allowable. The tax law allow you to give out benefit in kind to your employees. When we talk about benefit in kind, you can rent them apartments. It can even be the company's house that you give to them to live in for period in which they work for you. You can get them drivers. You can give them official cars. You can get them gardeners. You can even give them you can sponsor a professional course for them to go and learn more so they can serve you better. So yes, it is allowable for you to do these things for your employees, but there's a caveat, and the caveat is that whatever amount that you are spending, especially for rent, now I'm talking about rent, For rent, the amount of your rent must not exceed the total salary of the employee. That's why we are giving the salary of this person. This salary is 4.8 million. It means that the rent is not more than the salary. Assuming the rent was like, let's say, 1.5 million. I know the rent is 1,840 or something, and salary is 1.5. We are going to restrict the rent to the amount of salary. But in this instance, the salary is more than the rent. We are not restricting anything, and the whole rent is going to be an allowable expense. I hope you understand.
Yes.
Now, legal costs. Cost of income tax appeal, cost of debt collection, cost of acquiring new lease, renewal of old lease. Which of these are disallowed expense?
Cost of acquiring new lease.
Cost of acquiring new lease. Okay. Why?
Capital expenditure.
Yeah, it's supposed to be added to the cost of the lease. So what else?
Cost of income tax appeal.
Why?
I think because the expenses should not be reduced from the tax.
I think it's from penalty. That's why.
It's from what?
Maybe a fine or penalty. I don't know.
Because it doesn't
Okay.
relate to the business.
Okay. You guys tried, but none of you actually talked about the main reason why we are disallowing it. This is an appeal. It's like you are taking the tax authority to court. You are taking tax authority to court. And for you to have taken them to court, there's something must have occurred. An incident must have happened. It's either you paid the wrong tax or you have sure done something wrong. I know that fines and all these bad things are disallowed expenses. Now you want to take, it's like, okay, let me assume I am tax authority, I am NRS that you want to pay tax to. You took me to court and you are now removing the expenses that you spend in taking me to court in your expenses. Do you think I will allow it? I cannot. It's like I'm buying you the fuel that you want to use to burn me. You know that kind of thing. So no, it is not allowed because you want to drag the tax authority to court, and and it will even reduce your income tax payable. Why should we allow you to remove it? Do you get? Cost of debt collection, is it allowed?
Yeah, it's allowed.
Why? Why is it allowed?
Mhm.
Yeah.
Because it is used for purpose of business.
Yeah, actually for the purpose of the business, because for us to collect debts, we need to incur costs now. Maybe transport that you used to be running after these people, or the cost that you pay to your lawyer for drafting a contract to ensure that they pay as I went due, something like that. Renewal of old lease, is it allowable?
It's allowable
Why?
because it's related to the business. It's saying just like rent. When you're paying rent is relating to business also. You're keeping what the business is using for a continuity.
Okay. Why then? Why did we disallow new lease?
Um,
Because new
because
lease is capital in nature, as you are acquiring a new property.
So renewal of the old lease is not acquisition of property.
Renewal is operating lease.
That's what I want to hear. Renewal, that renewal is not a capital, like it's not a capital like expenditure. It's not the legal cost for renewal will not be added to the cost of the lease, unlike that new lease, in which the legal cost will be added to the cost of the lease, and subsequently, how you will expense it in your P&L later on. Do we get?
Yeah.
Okay, allowance for doubtful debts. Which one is disallowed? Which one is allowed?
General provision is disallowed.
General provisions. I want you guys to be talking now, please. I like as you are the one doing your work by yourself. It's easy to know the ones that you know. That's why I keep asking you why. So I'll know whether you cram it from somewhere, Maybe you have go and check it somewhere. I need to know the reason why you know what you know. So I can tell if your reason is right or wrong. Okay. So donations. Which of these donations should be disallowed?
How about specific
The
provisions?
figure you put for general provision is wrong, ma.
Oh, sorry. It's not my fault. I went me.
Okay, how about specific provisions?
Specific is allowed because it's specifically for certain people. There are some certain debtors that you know in your mind that there's high chance that these people will not be able to pay you back. Maybe one of your shop customers got robbed, or one of your shop customers, the shop got burnt. No, though the person did not tell you that he or she will not be able to pay back, but you yourself, will you have the mouth to go and be asking the person for money, knowing fully well what happened to the person? So such provision is specific, and it makes sense for you to provide for the bad debts for such provision. Do you get? So for specific provision like that, it's an allowable expense. When you talk about general, it means that you are not targeting anybody in specific. You are just saying, okay, out of my 5 million debts, it seems I will not be able to recover 1 million. Those ones are general provision. Do you get the difference now?
Okay, thank you.
You're welcome. Now, donation, which one should we disallow?
Donation to women
Women society of the host community.
Yeah, that's the only one. I'm trying to look for the list of donations allowable, but I cannot find it file. I've lost it. And all people I'm reaching out to don't have it again as well. But I'll still continue to look for it for you guys, Sha. I hope I see it. It would be nice to have you guys read it before your exam. Okay, so now we talk about interest and other finance costs paid. So they told us that the company obtained 100 million from the parent company, and the interest is 12% per annum, because you know that the interest that they gave us in this one is not only that interest, they have interest and other finance costs. So we need to know how much is the interest on parent loan. Interest on parent loan. So we have 12% of 100 million. How much is that, please? I think that's 1,200,000. Am I correct?
No, I 12 million.
Is what?
That's 12 million.
12 million. I wanted to say, if I'm not correct, it's you guys. So. Okay, 12 million. So now let's go back to that information. Oh, I'm supposed to open that particular one that we did. Maybe I will copy it here. Actually, like, why are you dropping everything now? I want to come and copy the thing. Okay. Copy. Okay. Let me put A here. So this one would explain the reason why we are allowing all of these interests. Everybody that is in the last class, I don't think you should have any question on this because we did it together. So because this interest is still within the what? The 30% of EBITDA, we are allowing all of the 12 million. So we are not disallowing anything on interest. We are not disallowing anything on interest. So general expenses now. Which of these general expenses is to be disallowed and why?
Wedding gift
Fine
to
imposed on the company's driver for traffic offense.
Wedding gift.
yes,
Which
is
one
Now,
again?
disallowed.
what did you
Fine
start
imposed on a company's driver for traffic offense
before
is
Fine.
disallowed. Yes.
Why are we disallowing wedding gifts?
if it's unbranded?
It is what?
Unbranded.
I cannot really hear you actually.
Unbranded, she said.
Okay. Well, that cuts it as actually. But the I feel like though that's one of like a valid reason. But when I was doing the question, what came to mind was that I don't see any reason why you should remove the wedding gift as an expenses. It's none of my business as the tax authority that your staff is doing wedding. What concern me with that? Will the wedding gift make the staff more efficient? Though it's a form of motivation, oh, but it's not a commission, it's not a bonus, it's not all of these things that can call emoluments to the staff. So why should I allow such an expenses? That was what came to mind when I saw it. Okay, so wedding gift this. Do you have any other expenses? No. So we can calculate this. You must not fall down there, Ayatollah. Oh, I'm not supposed to put it there. That's not the. We still have less non-taxable income. Less non-taxable income. Where we have dividend, Abi. How much is the dividend? 2,700. Then we have profit from sales of assets, which is how much? 600. Okay. So we can add it all together to give us our adjusted profits.
The 3,300 should be in bracket, ma.
Oh, that's true. Thank you. Okay. I think we have our adjusted profits. Hello, what is it? Okay, I think that's question B. Done and dusted. Then we can move to C. But to move to C, we need what? To calculate our capital allowance. Let us do that ASAP. Though I said I will be comparing and see if half of the class should get it right, but I feel like I just needed to do it for the sake of some people. Because I know some people will still have issues with the capital allowance. So now, let's compute capital allowance first. Computation of capital allowance. Please just write for the relevant years of assessment. Because if you check this asset, it's span across different years, 2017, 2018. When did the company come start business? Did they tell us? 2018, January 2018. So we have from 2019 year of assessment, right? Because January to December 2018 will be 2019 year of assessment. So for capital allowance, how many assets do we have? We have plantation equipment. So let's start from here. P equipment, industrial building. Let me just write build. don't want anything to stress me today. Non-industrial build, motor, F and F, R&D. That's research and development, right? So we need their initial allowance, annual allowance rate. So for equipment, plantation equipment, what do we have? What is the rate?
5%.
Eh? 95%.
Yes, my plantation is 95.
That lady used 90%, I think.
No, it's 95. I use 95.
Really?
Yes, ma'am.
Oh, I'm sorry. But then why was our figure was still different?
I don't know.
Let's continue. You will see your mistake from here. Or maybe I'm the one that made mistake. You never can tell. Irú kí ni gbogbo eléyìí báyìí? I've turned it to percentage. Ṣé mo bẹ̀ẹ́ ni? Ah. I want to put the percentage here, so I'll not be writing percentage all over again. That one is going to stress me. So industrial building is what? 1510. Non-industrial building 1510. Motor vehicle 5025, right? Furniture 2520. R&D, I think that one too is 95. Abi? Okay. So we are quoting, right? We are quoting in thousands. I'm pressing nonsense. We are still going to have total. I forgot total. Okay. So now let's start one after the other. We start from the first year of assessment, 2019 year of assessment. So cost of assets. As at 2019, which assets do we have? We have assets that they bought before they started business, which are everything in 2017. Then we have everything in 2018 as well. Those one will fall under what? 2019 year of assessment. So let's check them out. Plantation equipment, 4,600. Industrial building, 12,000. Non-industrial building, 9,000. Motor, did they buy motor? Yes, 8,400. Furniture and fittings, 1,500. Please don't forget, this adjusted profit that we did is for which year of assessment? 2023 year of assessment. When we get to 2023 year, don't forget that we have a particular capital expenditure that we disallow. We must put it in this thing. In case I forget, you guys should remind me. So cost, with them, let me put this thing. Initial allowance. I'll not be doing any workings beside you. You guys are already, I believe you guys are already, you should be okay without me going to decide to go and write anything outside for capital allowance. So initial allowance for this one is going to be what? 95% multiplied by this. And because we want to minus it, we are going to be putting our minus, right? For this one equals to 15%, 15 percent multiplied by our figure here. How many percent is this also? 15%. Somebody is raising up his or her hand. The person can speak.
Yes, Mama. Please, I have a question.
Okay.
When we are doing our basic period schedule, we have the old rules and the new rules. Please, Mama, when are we to use the old rule? Like from which year to which year are we? Do we stop using the old rules and when to start using the new rules?
For the old rule, for basis of assessment, I don't think there's any question that they will give you that you will need the old rule for basis of assessment. Ever since they brought out the new rule, all questions have been based on the new rule. But if I can remember quite well, I think my diet was the last diet that they used old rule, and I wrote a test study in 2022, if I can remember. So I think all questions from probably 2022 year of assessment would require new rule. Before that, to go through. So, but if you go and check the questions of base, and besides, basis of assessment can never come out for you professional guys. It's skills guys that have to worry about that because there are questions that they can tackle you with. So, base of assessment, I don't think I've ever seen it in advanced staffing. The only thing that you will need the knowledge in some things, like for example, this case, you need the knowledge. In pioneer is no longer in advanced staff, so you have no pioneer. In mining, too, you might need the knowledge in mining. Where again? DTA, I have not seen DTA too in your pack. I have to go and check again because I don't know, I'm confused with this new pack. Double taxation arrangements, all those things like that. But you can never see base of assessment as a standalone question in your exam for advanced tax. It's not possible. It's too simple for you guys.
And the reason why I ask is that basic period schedule has to do with capital computation of capital allowance. You know when this asset.
I can't get what you are saying. I don't. Your voice is not clear. Maybe you can type or move to a place where I'll be able to hear you very well. I know you were saying something, but
I think what she was trying to say was that for business period, for using the capital allowance, I think there are some parts where there is 2019 there, and maybe she follow using the old rule.
oh, okay, for capital allowance specifically. The only thing that changed in capital allowance is investment allowance. Investment allowance is the only thing that changed. So for capital allowance, is the new rule. Don't use old rule for capital allowance. Don't use old rule for capital allowance, please. Don't use old rule for capital allowance. Okay, so I get what you are saying. That because this one is 2019, and after 2019, the new rule was not in place. So we're supposed to use new rule for commencement to calculate capital allowance. I think you have a point, actually. You have a point. But the problem is that if you do it that way, everything will just repeat itself. You have a point. Somebody is raising up. Hi, Ade, you can speak.
Good evening, ma.
Good evening.
Just to clarify, this motor vehicle and furniture and fittings, they didn't come under. Was it not 2019? I'm trying to. Yes, plantation equipment, industrial building, non-industrial building were under 2018.
Oh, in the question says that the company came in existence January 2018. Remember that
Yes.
this is the year of assessment.
Okay.
Year of assessment is not an accounting year. And as of
Okay.
2017, the business has not even started. According to capital
Okay.
allowance book, how will you treat that? any expenditure that you make before the business starts will be treated as if you incur it on the first day that you start the business.
Okay. That's
That's
why we
the
are
rule.
doing them in
Yeah.
2019. Okay.
Yes. So
Okay.
like,
Thank you.
who was the person that brought up that old rule stuff? Who was the person that spoke about it?
Oma. Abi
No,
Oma.
Isa
not
Fatima.
me. It's Fatima.
Okay, Isa Fatima
Fatima.
Olajumoke.
Okay, Fatima. So I think we're going to be going with what Fatima just suggested. Because though in my own personal calculation, yeah, I did not consider it. I used the new rule straight away. But she has a point. She has a point, and I think we should consider that. So because of that, I'm going to have to like do this thing beside here because even me, I would need to do it out here. So we have year of assessment, basis period, then we have assets. So if you're using the old rule now, the company commenced in 2018, right? So the old rule says from the date of commencement, which is 1st of January, 1st January, 1st January 2018 to the end of the year, 31st December 2018. Abi?
Yes.
So all of these assets, plantation equipment, industrial building, non-industrial building, motor, F and F, all of these fall into this particular period. Then we have 2019, which says from the date of commencement to 12 calendar months, it will be the same date as this because it's 12 calendar months. Then we have 2020, says we should follow what preceding year basis. Preceding year basis for this one is going to be 1st of January 2019 to 31st of December 2019. So now this one, there will be no new assets because we already used it up there. So in 2019, do we have any new assets? Did they buy any new assets in 2019? No. So let's just continue it like that. 2021 is going to be preceding year basis 01, 0, I wrote 10, 01, 01, 2020 to 31st 12, 2020. Any assets? No. 2022, 01, 01, 2021 to 31st December 2021. Did they buy anything in 2021? They bought
Motor
motor.
vehicle.
Okay. 2023, Abi. So that was 01, 01, 2022 to 31st December 2022. Did they buy anything 2022?
Furniture and fittings and research and development.
F and F, and they bought what? R and D. All right, so we're going to be following this schedule.
And the expansion on industrial building.
Yes. Expansion. Let me put it down here. In industrial building, expansion. So we'll not forget. Okay, so let's follow this. I hope I've not confused anybody. We are just using the old rule because this year actually fall under its time. So now this one is now going to be 2018 year of assessment. It's going to be 2018. We are going to follow that thing that we just finished doing. And that assets allocation. So annual allowance for this is 0. For this is going to be open brackets, this plus this multiplied by 10%. Let's see, going to put this in brackets. So equals to this plus this multiplied by 10% equals to this plus this multiplied by how many percent? 25%. Okay, I don't have two brackets. So equals to this plus this multiplied by 20%. This one is still 0. We sum it up for this, then we have it. So do we have anything that will enjoy industrial investment allowance here? I don't think so. No, we don't have anything. So this becomes our total capital allowance for 2018 year of assessment. Sorry. That's not where I'm supposed to put it. This is where I'm supposed to put this. This is our total capital allowance. So tax written down value, carry it down. Ah, so then we can move to 2019 year of assessment. Is somebody raising up? And no. So now let's go and check. 2019, did they have any assets, new assets? No. No new assets. So the only thing that we're concerned about is the new asset is our annual allowance. Okay. There's no proration. The basis period is 12 months. All true. So we're just going to repeat this figure. So you copy, then you paste as values. This one is 0. So then we have the new tax written down value. So that is the annual allowance for, and that's the total allowance for 2019. For this one, for 2020 year of assessment, do you have any new assets? No. No for 2020, no for 2021. Please, I hope we are still following. I hope I've not lost anybody. So we copy this. Then our tax written down value. It's 2021 year of assessment. I think that one too is 0 now. So we'll copy and paste again. Then we have the tax written down value. Now, how many years have gone? 1, 2, 3, 4. This is the 4th year for this person, which means we have to. How many motor did they buy? Sef? 3 cars. How much are we removing? 3 cars, 10 naira per car, 30 naira. So out of 1 million, so you write plus. How do we remove 30 naira by? 0.030. It's going to approximate. So what we'll do is increase this one. Yes, this is what we want to see. Please, do you understand what I just did here? This
No,
is the this is the last useful life for motor. Motor have 4 years. 100 divided by 25, 4 years. This is the year 4. If we don't do what we did, remember that you're supposed to leave 10 naira at the end of useful life until you sell the assets. Please don't forget that rule. You leave 10 naira per asset. And this particular year is the last year for what? For that motor. So this one should not bring 0. Let's go and adjust this. You must show the 30 naira. That's the 30 naira. Please,
Please, can
guys.
we do the reworkings for that motor vehicle 2021? The annual allowance.
It has no workings. Workings is tax down value divided by the remaining economic useful life. How many years does motor vehicle has for useful life? How many years?
4.
4.
4.
So because it has 4 years, 2018 year 1, 19 year 2, 20 year 3, this is year 4. And the rule says that at the end of useful life, you leave 10 naira per asset until you sell the asset, until you dispose it all. And we have 3 motor vehicles, right? 10 naira times 3 is 30 naira, which is the amount that we have retained here. So you remove 30 naira from your 1,050,000. And know that we are quoting here. Don't go and remove 30 naira from this 50 naira. Is wrong, go, because you quoted. So what I would advise you to do is to write this particular number in full and use your calculator to remove 30 naira. Follow your calculator straight. Don't use your head, yo. If not, you end up writing nonsense. So as the person gotten how we did this place?
No, I did not.
Hey, how else will I explain to you?
Part
Why?
of that 30, 10 times 3. You subtract that 30 from which figure?
From this tax written down value. This is the last year. We cannot remove all this figure. If you remove it, this one will be 0. But the rule says it must not be 0. You keep 30 naira per asset. You keep 10 naira per asset. 10 naira per motor vehicle. And we have 3 motor vehicles. So 10 naira times 3 is 30 naira. So we are removing 30 naira.
Okay.
All right. So now for 2022 year of assessment, do we have any assets gotten? They got motor. So let's go. We have cost. Cost. Well, which one is motor? 1, 2, 3. That's car, right? So how much for the motor? 5,600. Initial allowance 000. This one will be equals to 50% of this figure. 0 for this, 0 for this. Annual allowance. So this place, of course, is 0. This one is still going to be this figure. This one too is going to be this figure. This one equals to the cost. Cost minus initial allowance multiplied by 25%, which is the annual allowance percentage. Let's put minus. So furniture and fittings. This will be the last year for furniture and fittings too, because this is year 5. How many furniture and fittings is that? 10. 10 multiplied by 10 naira is how much? 100 naira. So this one is going to be equals to
Sorry
minus.
for talking about this.
Yeah,
If you are removing 30 naira from the 2021 annual allowance, then the total value will have changed. It will not be 3,060,000 again.
which one are you talking about?
2021 total allowance, total capital allowance. Won't the value change?
2021.
Yes.
Oh, thank you. I have to make it like this too, if not, if you want sure. Thank you for the observation. So that's written down value. This one, it must show the 100 naira that we remove. Oh. Okay. So for the last year, 2023 year of assessment, can you guys see the reason why I told you to go and do it by yourself? It's a whole lot of work. And this thing, you guys will be doing it. This is a question, number one question. It's the number one question. That's why it's very plenty like this. So you guys need to be very accurate and fast. So I think we also have some new costs here, Abby. So what are the things that we bought? F and F, R and D, then expansion. F and F, this is not F and F, this should be F and F. How much? 2,000. R and D, 7,000. That expansion is it industrial or non-industrial? Is it non-industrial? Industrial. So this is industrial, this should be 3,700. Initial zero for this. This one is 10%, right? Okay, 15. 15% of this figure. 0, 0. This one is F and F. That will be 25% of this figure. This one is 95% of this figure. Total then we have this annual allowance. This one is 0. This one we're going to be adding two things together. Equals to open big brackets, open small brackets, cost minus initial allowance multiplied by 10%, close the second bracket, plus this figure. Or should I say minus so that it will plus it for me? Let me leave it like that. So this one is still equals to this one. There's no changes. This one equals to this one. This one, we're just going to calculate it. Cost minus initial allowance multiplied by how many percent? 20%. This one is going to be 0. Please, if you have any question or you don't understand what I'm doing, talk. Oh. So that's all. I think that's all. That's all. We are going to be stopping here. So the lady that lady that reminded us of the old rule, is your figure similar to this? Fatima. Fatima,
Ma.
did you get it right?
Yes, ma.
And the funny thing is that it's the same thing here too. But that the number of years have increased.
Yes, ma.
My figure is the same figure as what is here, but the number of years have increased. Okay. Let's go now to the number 3. C says what? You should calculate tax liability, right? Computation of tax liability for the relevant years of assessment. Let's put this and this. So we have to take from 2018 year of assessment. Now they gave us some figures. December ended 31st December 2018 turnover accessible profit. So for 2018 year of assessment, if you go up, know that we followed old rule. So now let's go and check our basis period. It covers what? 1st of January to what? 31st of December. And this is 31st of December 2018. The same period covered by 2019. We use the same figure for the two. We are going to repeat the same figure for the 2 years. So just so I will not confuse anybody, let me write it out. 1st of January 2018, 31st December 2018. So what do we have here? Accessible profits. How much is the profit? 78,750. Look at this turnover. It indicates that they are a big company, right? So that's our accessible profits. Do you have any loss? We don't have any loss, but we have capital allowance. Capital allowance. Balance carried down is 0 for the year, equals to, I want it to be a positive figure. So now absorbed. Should we calculate the restriction? So the restriction is going to be, how many percent is the restriction, Seth? Can somebody remind me of the percentage?
66 to third.
Over
Over 3.
Okay, thank you. 2/3 multiplied by, so because this one is bigger, we leave equals to this. So balance carried down. This is supposed to be balanced both for the not carried down. It's coming from previous set. Balance so for this one too. Oh no. We are going to have the taxable income. Company income tax is 30% of 63595. Yes, 60. Sorry. Hold Okay, TET now. As at this year, TET should be 2%.
Hello, man.
Yeah.
Please, the adjusted profit, I thought it should be the accessible profit as well.
Yes.
Why are we having 78,750?
Because that's the accessible profit for 2018. This is it. The one that we calculated here, this one is for 2023 year of assessment, and we have not reached 2023. This is 2018 first.
Please,
You
ma. Sorry for
I
interrupting.
I can hear you.
I want to know how we got that restricted figure, the 52,500.
2/3 multiplied by our accessible profit.
Okay.
Are we together now?
Yes, ma'am.
Okay.
I'm
So
sorry.
yeah,
Is 62 is 66 2/3 the same as 2/3?
yes. No, that 66/3 is in percentage.
Oh,
66/3%. Well, this one is just over 3.
okay. Thank you.
You're welcome. Okay. So for 2019 year of assessment, it's going to be the same. But everything is going to be the same, except the capital allowance. So let me just copy from here. Okay,
Please, ma, where did you get the accessible profit? I'm still confused. Please, where did you get it from?
I'm coming. So this available profit is in the question. Check additional information 10 is here. Can you see this other question is here? They gave us the profit, the sales and profit from 2018 to 2021 accounting year. Check the question. It's right here on the screen. It's right here.
Okay.
So for 2019 year of assessment, we have the capital allowance buffer is 0 for the year. Let's check for the year. How much capital allowance for? Oh, that's going to be close to 2019 with this, right? Restricted is going to be 2/3 multiplied by this figure. Still going to be the same amount. We lived with this amount because it is a smaller one.
Please, you didn't change the accessible profit for 2019.
Yes, because according to the old law, that's how it's going to be. That's why the old law was changed. There's overlapping of profits. Now we are taxing the same profits 2 times. So taxable income, please. I hope you guys are following me. Oh. These are our taxable income. So tax liability, we have CIT, 30% or 75, 690. Please, in your notes, write this thing in full. Put the additional 0 that we did not put. Okay. (2019) TET is still 2%. What is it? So then the next one is 2020 year of assessment, Abby. So the basis period for this was going to be 01/01/2019 to 31st December 2019, right? And we have the profits of that one year too. Let's just copy this so I don't have to stress myself. Accessible profit for that year is 95,120. Capital allowance brought forward is zero because we absorb everything. For the year, how much is capital allowance for 2020? So restricted equals to 2/3 multiplied by this. The figure is bigger. Relieved will be equals to this. Balance carried down still equals to 0. Taxable income equals to this. If you don't understand, you can ask your question. This is one of the example of what you can face in the exam. So if you don't understand this question now, please talk. I hope you guys are going with me. I'm not just typing by myself. Which year is next? 2021 year of assessment. So, but this one will change to 2020. Assessment profit for 2020, 142,800. Capital allowance for 2020. This one is 0. Did not bring anything forward. Capital allowance for 2020, 1 year of assessment. This restricted has calculated itself. E70 has calculated itself. That's the advantage of Excel. So we're going to be relieving it straight. Because we have 0. Taxable income. Then let's calculate the tax liability. Which number of year is this? Is this the 3rd year or the 4th year that we're calculating?
Okay.
This is the 4th year.
4th year.
Okay. This one, the TT is still 2%. Yeah. Okay. Because it is the fourth year, number 4, we calculate minimum tax. Don't forget that minimum tax is what? Minimum tax is for all companies. You're not supposed to calculate minimum tax for the first. Is it first 4? It's first 4, and this is the 4th year. So it's on the 5th year that we calculate minimum tax, not here. Not here. Okay. So I think that this is where we'll stop for this particular year of assessment. Then we'll have 2022 year of assessment. Let's copy to make our work faster. Okay, but for this place, it's going to be 2021. Assessable profit is going to be 166,900. Wow, this thing is we've gone far. Capital allowance brought forward is 0 because we did not bring any basic forward. For the year 2022 year of assessment, for the year is this. This one has calculated itself. Relieved going to be the lower of the two.
Hello, ma. Please, for this TET, when are we using 3%? Or we are not using 3% at all?
You will have to use 2.5 before you use 20%. I think I already explained that time to that number. I even snap it to the group. We have the years. Somebody should help us to tag it on the WhatsApp group. We have to follow the years, the year that the stuff changed. Can somebody help us to tag it on the WhatsApp group? So in this year of assessment, are we using 2% or 2.5%? Guys, it's it now.
I don't know the difference between the. I'm confused at times. I'll see 3%. I'll see 2%. I don't even know
Is it
the difference.
2.5 or 2%?
Yes.
Are you sure?
It's 2.5.
2.5 starts from what year? Let me check my book.
2023.
I think what 2023 now. Let me even check my book. I'm coming. I've not memorized the year too. Where did I write that instead? Start from January 1, 2022. I think wow. That will be in the next period. Yeah. 2% multiplied by this figure. Then we have our total tax. So is this year 5? Guys.
Yes, that's the 5.
So minimum tax will apply. Minimum tax is what? 0.50, Abi? 0.5% multiplied by gross turnover. How much is the gross turnover for 2020 year of assessment? Is here 314.
Won't we use the 0.25 this year?
0.25 start from January 1st, 2022. This is still 2021.
Okay.
So we have 51 million, we have 1.5 million. The company will pay which one?
1.5.
61 million.
Then we have the last year of assessment. Let me copy. Thank God for copy and paste. If I have to rewrite everything, I can. Mo lọ cut mi ṣá. Something can happen to somebody if somebody has to keep writing this thing over and over again. Sorry to you guys, shall, but you guys will have to write it over and over again in the exam. That's one of the icon story, sha. Acceptable profit is what we got here. Adjusted profits equals to this. Capital allowance brought forward is 0 for the year. Let's go and check it. This one. Restricted is way higher. So we'll restrict this one. Yeah, okay. So we have taxable income. So tax liability now. We have CIT, 30% of 170, 185. You're supposed to write it in full. Everything that I write, I'm supposed to write it in full. But it's because we quoted this thing, that's why I did not write it in full since. So TET. So this is where we are going to use 2.5. Thank God. Okay, minimum tax. Minimum turnover. Turnover is gross turnover 350, 900. So of course the company is let me just copy this one. And we have come to the end of this question. Who got everything? Guys, who got everything? Olaide, your hand is up.
Yes, so I don't even know. I got lost at a point.
Where did you get lost?
So capital allowance at a point, I think I was saying that you did not deducted it from one of the years. So I was now wondering 3,000, 3,060. Like here.
Oh, thank you. So everything we
So
are
I was
just
not
saying.
wondering that is it that what I know have changed or something?
No, no, it was a mistake. Sorry for
Right, thank you.
confusing you.
Thank you.
Okay. Any other person? Any other question? Guys, please ask question. This is a exact replica of what you'll be facing in the exam. I beg you, ask question.
Maybe we can dodge this kind of question. Because look at the time that we have spent solving one question. Maybe we can dodge it.
I know. Well, you know it's question number one. You should at least try to attempt it. What I would do?
Sorry, ma.
I think
Sorry,
stop like
please.
even my diet. I'm not sure. I
Hello,
cannot
ma.
remember. Yes, Kudus.
The TET for 2021 supposed to be 25. The TET for
TT is supposed to be what? For which
The
year?
2021 figure will now be
for
wrong. It will
2021
not
supposed to
be
be
correct.
25.
Yes.
2021.
I don't understand though.
Accessible profit for 2021 is 142,800. Then for the capital allowance for the year 3,016 naira. If we subtract it, okay, you've corrected it. Okay. Please, is the class over? Yeah.
I guess our network is bad.
Okay, thank you.
Hello guys, we can log off. Oh, our Wi-Fi went off. So let's log out.